afternoon, everyone, and welcome to the FX Daily Roundup. And obviously, bigger news here in a sense is the S&P's back at new highs again. I just wanted to go and share this out. I was talking about this in the chat room, and to me, I think this is going to be a good area where I think that we'll probably see the SPOOs kind of start to fade for the rest of the week. And I'm not saying a hardcore sell or anything like that, but we did go in and close at the highs on Friday. Then we punched up higher in European trading at 1 o'clock in the morning with some positive China news. Then, of course, we got the negative China news in the U.S. session, sent the market lower, had some key support coming in on the D's futures at 31.10. We didn't quite make it. We almost made it there. We made 31.11, and 31.08, I think, is 38% of this pullback. But then we started to come back, and then we got the positive news announcement about Huawei. And so we came up here, and actually, if you're looking on the D's futures, we had about 1,500 contracts being offered at 31.2075. They chewed through those, but we couldn't get any higher than that. So we're starting to ease back, and my thinking is that I think this is going to be it. I was hoping they'd actually make it up to about 31.22, 23, blow some stops, and then exhaust. But my thought is I think we're going to start to weaken from here. My thought is after we've had such a fabulous run, it's not a matter of just because it's so high, it's time to sell it. I just scalp and day trade, so I'm just only going to be taking the short side. But my thoughts are, when the news came out at 1 o'clock in the morning, the market, took off to new highs. Then we turn around and get, a new story going the other way and flip everybody down. Now we come back with the Huawei, and we were able to take those stops out on the D's futures at 31.2075 as far as hitting those all those contracts that were there. And there was 1,500. Actually, it was like 1,300 sitting there for the longest time. And as we got up higher, it built up, and we got up to about 1,500 right when it was hitting it. And they were able to chew through that. Kind of dipped a little bit, and we're kind of holding here. My thoughts are we're just going to probably it's going to set up a situation where the market will probably start to ease back a little bit and ease back a little bit more. And then probably by the middle of the week, we're somewhat lower. And then people thinking, you know what, maybe that was it. And I'm not saying that's it, like it's the end of the day for these SPOOs. I'm saying at this point, I just think, at least my thoughts is that the risk reward at this area, considering the back and forth stuff going on, 1 minute that's, we close it at all-time highs. We extend that with some good positive China news. About, 5 hours later, we get some negative China news. Then, as far as the trade talks, then we give it the Huawei. So it looks like they're trying to do what they can to keep the talks going. But the key to me is going to be the close above 31.23 on the D's futures, which are trading at 31.18. If we close above that, then that opens the door for us to keep the train going. If not, I think you can set yourself, I believe, for a move to go lower, and that's across the board with the SPOOs or the NAS or the Dow. Moving into the euro, we are seeing the euro come into a key level here. We actually had our bias chart resistance today. I think that's at 1080. The market got up here, and the euro up to it was 1090. Take a look here. Hopefully things are starting to wake up in the euro. So we made it all the way up here to 1090, essentially. But the bias chart support, or resistance, I should say, for today is 1080. And the analysis was, hey, if we get a daily close above 1080, that actually negates the downside action here for the euro. And before we get to the euro, we'll jump in, since I already have the chart loaded up for the dollar index. Same thing with the dollar index. We had 97.89, that key level that we were able to reclaim. Remember, we lost it and opened the door for us to move lower. We came back, we failed there, remember, a couple of weeks back, and then we came back and we said, hey, look, the door's open, in the sense that they'll have a little bit more of a bullish bent, but it's still only a daily close above 98.65. That would put the bulls in charge, but we had a resistance, a minor resistance level throughout the week at 98.41, and we really weren't able to close above that. Open the door for us to move lower. We got below 97.89. Today's bias chart support was at 97.60, and low for the day is what? 97.68. But the analysis was if we get a daily close above 97, a daily close below this pivot of 97.89 opens the door for a move to 97.20 for starters. Now that being said, let's go to the euro. And inversely, a daily close in our analysis was the bias chart resistance is 1080, but a daily close above 1080 does negate the downside picture. And we kind of were holding here. We talked about this in the analysis. Hey, the euro was not able to close sub 110, even though there was a lot of pushing. Our bias chart support held all week long, which we had it at 994, which not only was at the 61%, and I think it was 993 was a level right there. So that was our support throughout the week and actually held this last week. I thought it looked like it may even dip below, but we were saying, hey, trust the levels. That's what it's about. But if we can get a daily close above 1080, that does negate the downside picture. It's the same thing that we talked about with the dollar index from the week before. Which was a daily close above 97.89 negates the downside picture. But as I said, it doesn't turn full-on bullish unless we get a daily close above 98.65. Well, like I said, just because if we get a daily close above 1080, it negates the bearish picture, but it doesn't make it bullish. I mean, it's, like I said, certainly just like the way the dollar index, remember, held twice as those runs below 97.89. Well, we haven't held twice, but one thing we can point at, which is positive, is despite how negative this market looked, we were not able to get a daily close below 110. So that gives it a little bit of extra bullish bent, but it's not bullish by any means whatsoever. To go bullish at this point, and we would actually, let's take a look at this. We would actually need to get a daily close above 11.15 to put us on a to say, hey, the bias now is now bullish. And like I said, from a very, very ultra short-term point of view, yeah, it's bullish in the sense that, hey, you want to be picking up, longs probably towards about today's bias chart support is 11.18, but longs back towards 11.30-ish maybe. Maybe even you can maybe even do better than that. Probably, well, yeah, it's right here, 10.33. Let's see if there's anything. Yeah, right there. So 10.35. So if you are planning for the long side, 10.35 is basically the line of demarcation in the sense that, they need to defend at 10.35. Now, it does have, like I said, a bit of a bullish bent. But like I said, if we close above 1080, we've negated the downside picture, but we actually need a daily close above 11.15 to say, okay, it's bullish. Now, let's go and move into the cable. And you can see here, we're right here at the the bias pivot. Actually, our analysis going into the week was resistance. I think it was going to be 29.40, but we were already at 29.40 when we were doing the analysis at 3 o'clock in the morning. So we said, well, we got to respect where it is. So let's move it to the pivot, which is 29.80. And you can see this pivot, and we've had it in maroon, has been there for a long, long, long time, going back to nearly a year and a half. And you can see the importance of that. And you can see how well it's even continued to react twice. But I think we're going to be able to get above that, if nothing else, just to goose the stops. But if we get a daily close above that, and it certainly looks like things are heading that way, it does turn things positive, especially how well we've held on this downside. So it really, if we get the close above 29.80, I don't think we go gangbusters to 32, but the next area, and beyond the 30.50, because remember we saw that, the next real area of contention would actually be at 30.93. So let's see what happens if we can get this daily close above 29.80. Also looking here at the dollar CAD. The bias chart resistance we had for the entire week, actually as we closed the prior week, not this last week, but the prior week, we had mentioned 32.69, and that has held like a rock. I mean, we came up short of it. I think it was on Tuesday, I guess, or maybe Monday. Then Wednesday, they made an attack towards it, still came up short. Thursday, I think that they got above it by 2 pips and then came up short. We're looking for a move actually down to 31.84, but we do have bias chart support at 31.96. We're almost there. So I felt a little bit confident about that. I haven't done anything with dollar CAD in a while. probably a mistake. But anyway, because you see, you had this very nice gravestone doji on Thursday. Let's take a look here. Also, the dollar peso. I mean, what a dog. I mean, like I said, you've heard me badmouth this currency backwards and forwards. You'd have thought that I had a real bone to pick with it. It's just from a technical standpoint. I just couldn't see where people kept thinking it was a bullish, and I'm talking about this was very early on while we just kept failing and failing and failing and failing. We eventually got up here. Now, before we did before we made that move, I said, but the best thing you can say is it's holding. So we got that stop. There was some Latin American really bad news last week that really pushed us high, but boy, what a failure. And then we slid right back below the pivot, and we're above it right now. I think today's bias chart resistance, I believe, is 1927. So we just about made it up there, or may have taken it out by just a little bit. But this market is really in a lot of trouble. To me, it's dead money. Talking about dead money, here's another market to me is dead money, and that's the Aussie dollar. This market has just done absolutely nothing. And you're thinking, well, look, it came up on Friday. Hey, look, one of the things I did go on and post in the analysis, look, we got some minus short covering in here. And the only reason we got the minus short covering, because what happened on Friday? I'll take it right here. The dollar index ended up sliding and giving back. So really, the Aussie dollar, in my eyes, the only reason it even saw some short covering on Friday was some overall, and I would stress overall, dollar selling, which it benefited from that. But this thing is just, I mean, it's not going anywhere. We actually came into it and held that bias chart support, but or this level, I should say. But this market's not going anywhere. It's just dead money. You can see here, we even had a gravestone doji here. The market just kind of drifted lower, 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 lower. Had also bad employment data. The only thing it's benefited from is from, like I said, some overall dollar selling. You can see the two ranges here. Trading in a, it looks like it's wide, but it really isn't. It's just trading in a very, very tight range. You can see that. So not a whole lot of anything happening here with this pair. Dollar yen, it has come down a little bit here. I mean, we failed at that pivot last week. We actually came within 4 pips of tagging the 78% on the way back at 822. We've rallied up. We actually came in, our today's bias chart resistance, I believe, was 109. I can double check. Hang on. Yeah, our bias chart resistance this morning at 3 o'clock, we weren't even there yet, but we're working higher, was at 109. And you can see here the market got a little bit above it, and we saw it, dip off. Obviously, the bad China news is what spurred this move lower, but it is what it is. And dollar yen, we've been talking about that for the last couple of weeks as far as its inability to move higher, despite where SPOOs are. And we've talked about this. Boy, if you look at SPOOs, and especially again, new all-time highs on Friday, this dollar yen should be closer to 111. And so it's what I've been talking about for about almost 2 weeks now is like I said, the old 90s song, the things that make you go, look at it and go, why is it even here when the SPOOs are at, all-time highs? So it's telling you something. So if we do see a slide if we do see when the time eventually comes, I'm not saying when, although my bias for the SPOOs is to work a little bit lower because of the way the reaction we saw today. Although, once again, it'll be different if we can get a daily close in the SPOOs above 31.23. That's, to me, what's going to be where the rubber meets the road. But that being said, if we were to start to see a slide, boy, I think you're going to see this dollar yen really go, honk the submarine horns, because I think this thing would really come under some pressure. I mean, if it can't rally and take out 927 when the SPOOs continuously goes to all-time highs, it almost seems like day after day after day. Boy, what's going to happen if the SPOOs do pair back? Holy smokes, man, this thing's going to slide through like nobody's business. But that's all that we have for today here on the FX Daily Roundup. Keep an eye on those SPOOs. To me, like I said, it's going to be on the close about 31.23. I am seeing some the NAS futures did make it up here to the 50% retracement. Bear with me. Which came in at 83.22. Some good resistance there. And on the Dow futures, if we were able to get a pop in the SPOOs, I think you're going to see some pretty good resistance at 28.03 on the December Dow futures. We're 27,989 right now. SPOOs are at D futures 31.19.5. I think that this market really run into some trouble here at 31.23. Hence, my point is that, wow, if we can get a daily close above 31.23, hey, you're back in, back in black, so to speak. I mean, but my thought is this market, we already made an all-time high on Friday, which is another all-time high. We open up, European news comes out with positive China news. We pop up, goose the market even higher. Then we turn around and people like, really happy. And then all of a sudden we get bad China news in the U.S. session, and we've turned around and fall apart and come down here close to that key support, which is 31.10. Then we turn around and move higher on the Huawei news, and we not blow through, but we take out those 1,500 contracts at 31.20 and 3/4. But like I said, can we get above 31.23? Now that's decent news, the Huawei news, which was already in the cooker a while. But if this market really wants to move higher, then it should be able to absorb that and get beyond 31.23. And I just don't think it will do it. I think that as we get closer to the holidays, we're not even that far. Next week is going to be Thanksgiving. I think people are going to say, you know what, maybe I should start to take some money off the table. And I don't mean just like some day traders or scalpers like me. I'm talking about some PMs. Say, you know what, let me just start to lock in some of this stuff. Why should I be exposed? I mean, we're getting flim-flam on some of these China news stories, and it's not ending. Hence my point where I think we could see a general slide for the rest of the week. Anyway, thanks for joining us here. Consider a trial with ForexAnalytix. It's only $1 for 10 days. And like I said, you get access to not all the webinars, but as well as the chat room, to me is the strength, as well as all the different analysis, which is macro, basic technical, Elliott wave, harmonics. But once again, thanks for joining us here, and good luck trading the rest of the day.